Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, January the 6th, then the year's 2023. Let's talk trading. Weekly wrap up, NFP Day. These videos are for educational purposes. Your results may differ from mine. So let's just go right through the charts here. But first off, risk management. Let's make sure we start 2023 properly, that we always employ our risk management so we don't lose any more on one single trade than we're willing to lose. Let's keep our brains in gear and managed and not let any of the FOMO or the FOLO or the ROMO or any of this stuff happen, because you have to remember, pain doesn't come from the market. It comes from your reaction to the market. And our money management skills. Let's remember, we should take profit before the market takes it back. And that you don't control the outcome, so every win is luck. I know that's a hard pill to swallow. It really is, because you probably think you're a little bit better than that, a little bit smarter, but you have to realize you don't control the outcome, because if you did, the market would cease to exist. Okay, so a quick look at the month shows that we are down 181 pips from the monthly open. We zoom into the week, and once again we're down 183 pips because we had the monthly and the weekly open occur on the same day. Notice all the gaps have filled. And right now, we are right around the daily open. We're dancing right around it, right there. So price just crossed above it. And for the year, 178 pips below the open, because the yearly open also matches with the monthly and the weekly this month. So in this week, and you can see here we had an inside bar break yesterday on the daily and the weekly, and if you took those trades, you were sitting pretty. In fact, there was a response on one of my older videos. Somebody said, wow, horizontal lines, they're loving it, or something to that effect. That it was like, wow, nobody else really talks about that out there. Okay, the range right now, it's NFP day and we only have 95 pips of range, but you can see there's some other pairs. It looks like the yen pairs definitely moved. And once again, we're dancing right around that daily open. So, buy zone traders, this is your opportunity. Right before the I started this video, I was short and I punched out. Probably should have stayed in, but I realized something. I was managing my emotion as opposed to the trade, because I was in two positions. I was up on one, down on the other, so I punched out when I could. But had I just followed my signals, I would have made a lot more, that's for sure. Rats, once again, I saw the opportunity to come out of that upper rat zone, and I took it. And down here, actually, it was funny. Right before the NFP open, I saw them dropping the price, and it was just like, they're going to run this sucker up. I jumped in right before, and you can see it took it down, but then it shot it right up, and I punched out, I think, at 1912. I mean, I took the lion's share out of that first move, that was for sure. And then you can see, for you momentum type traders, there's the momentum carried through, and then we had a reversal here, and it's been coming down. So we've got a new M15 candle opening right here, and you can see what it's doing now. pivot. We haven't hit the daily pivot yet. That was another reason why I went long. I said they've already moved this thing down, and if the numbers are true or anywhere near true, it can't be good for the U.S. Even though on ADP, if you look here, we kind of had this. We had a movement to the upside on ADP, but ADP, you can trust those numbers. NFP, not so much. So you can see the price of the pound is dropping because they lied, I guess, on the NFP, saying, hey, you know, we had some good numbers, but I still don't believe it. That's just my bias. Okay, moving on, looking at the pivots. Once again, today's pivot has been missed, but we took out the weekly pivot because we pretty much opened on the weekly pivot, and we haven't hit the monthly pivot. So we've got a couple of monthly pivots this month and last month that haven't been hit. And notice we had 1, 2, 3, 4 missed monthly pivots last year. So we'll see what happens if they get taken out this year or not. Wick zone traders in and out of the lower wick zone. Once again, just horizontal lines. Take the trades when you see them. Trade in direction of whichever candle color you want to use. On these horizontal lines, it doesn't matter what time frame you're trading. I mean, you can put a monthly chart up for all that matters and trade what you see. But, you know, it's best to pick one and just go with it. So if you're trading the 1 minute, trade the 1 minute. If you're trading the 30 minute, trade the 30 minute. And don't focus on what's happening on the other time frames, because price is the same. Even though on some time frames you might have a red candle, and on others you have a green. But pick the one that you want to trade and stick with it. If you flip-flop around, then you're only going to have flip-flop results. That means they're not going to be consistent. And that's what we need to focus on, is consistency. And you can see here, price just cracked through the 119. And looking at the weekly range last week, holiday, nothing. You can see here we're at the 25% percentile level here. Nothing to write home about at 261. But, you know, out of the past 4 weeks, I mean, it's better than all but one. So it looks like we're getting back to quote unquote normal. We didn't break the high, but we broke the weekly high, but we broke the weekly low by 161 pips. Once again, horizontal lines. You know, previous week's high and low, you paint those lines. Doesn't matter what time frame, and then you just trade in a direction. And probably, you know, once again, you could use the the daily candle and take that trade. And for the buy zone traders, high minus, or rather rats, we got the high minus close 121, close minus low 54. So red rats, green rats both had opportunity to make money. The weekly buy zone traders, high minus open 12 pips. You can take that to the bank, but the open minus low, anybody shorting it, 249. So taking the daily weekly crossover or the weekly buy zone here once again proves that it would have been profitable to take those trades. And the thing about it is, you really don't need any indicators. I mean, you can use some of the ones I wrote to plot the lines, or you can even plot them just by hand. And sometimes it might even help you just to plot them by hand. Reason being, if you do it, it might stick in your mind. Oh yeah, the weekly open is this, because you'll remember because you plotted it. But if you just look at an indicator, it goes, oh yeah, okay, that's what it is. And then it kind of goes out of sight, out of mind, because it just becomes something that is there, but you don't see it because it's there all the time, and you just don't see it. You don't notice it anymore. That's why I actually wrote or put into the TRO-HL5 indicator the ability to show when price is near. That way, if price is away from the line, it'll turn off. But when it gets near it, within 5 or 10 pips or whatever threshold you set, that's when price will then turn. That's when that line will pop up and you go, oh, I'm near the open. So you can see right here, we have certain things, and let's see, only show near. The funny thing is, there's so many inputs. I think I just saw it. Only show near, true, only show within 10 pips. And you can see that line just went away. And once again, the threshold that you set on there is up to you. So for example, if we set the threshold to 20, whoops, only show near, my threshold 20, then the open comes back. So that's how you do that. So once again, set only show near to true if you only want to see the lines when they're within a certain pip range. And that might trigger you to actually see where price is compared to other lines. And you can see here we're having a nice move off of the 1890. Probably will hit the 00, probably will pull back. And we got within a point, and you can see the struggle there. And we're crossing the line. And if we put this back at H1, you can see Walmart trigger was at 20, and that would have paid off 30 pips if you punched out. If you wrote it and then punched out. And you had an opportunity here to stack on at the daily open. There was a lower high trade that just triggered off a 3 ball. Good for about 8 pips so far. You see a 1 ball. Yeah, I would have been punching out right there. It's like, you have to learn to take the money off the table. I mean, Walmart has really mastered it. I mean, he stacks those bricks like there's no tomorrow. And he has that dollar figure. And every time he sees his PL at that, unless there's some compelling reason to stay in the trade, he'll just take it off. And the thing is, one of the things I realized today was, and I've realized it before, like one was the managing emotions versus the actual trade. And the other is, when you're in a trade, you have to decide, are you going for just a quick couple of pips, or are you going, or do you want to ride it? Do you want to ride it to see how many pips you can make? And you have to have criteria for when you choose one or the other. Now, so for example, if you would have chosen to ride this trade, you would have just picked up a lot more pips. About 10 or more pips from when I said I would have gotten out. So yeah, there was another, they brought out, 10 more shrimp and put it in the bin there. Point being is, you have to make that decision. You might say, well, if I'm going against a candle color, I'm going to do it. Or if I'm coming out of the rat zone, I'm going to ride that sucker and see how many pips I can get. But you have to know these things in advance, and you have to trade accordingly. So, fellow traders, I hope you started off the year with a nice profit. And I'm going to wish you a fun and safe weekend, and a shout out to the new members on the Reddit thread. So, when you come back to trade, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.